as industry experts to take this up. I'll request you all as industry experts to take it up. I'll give you my example of cost drivers. Right, I'll give you my example of cost drivers. Right, Roshan could speak about his, and he will speak about his industry. I learned cost driver, right, ma'am, incidentally in SBI Caps, not when I was in Bajaj. And who taught me cost drivers was an entrepreneur who would not have even heard this name. Small guys, sir, but they understand finance much, but they apply finance better than finance MBAs like me. The name of the gentleman is Mr. Gopala. The name of the company is Karthik Alloys. So this guy comes to us for funding, okay? And he says, okay, we look at the entire thing and we look at the numbers, we feel comfortable. Then we ask him a question. What's your background, Mr. Gopala? He says, right, 25 years in ferroalloy industry. And, right, which company? BBC Ferroalloys, a famous Andhra-based company's marketing head. That means this guy understands his business. So, sir, very good. That means you understand ferroalloy business. You want to start ferroalloys? Why, Mr. Gopala? He says, I see a boom coming in ferroalloys and I want to encash upon it. And now I want to earn money for myself, right? Not for BBC Ferroalloys. So I want to be an entrepreneur. I said, fantastic. Then the next question, which explains valued cost drivers. Cost drivers. Where do you want to locate your plant? And he says, he's an Andhraite, based out of Andhra. Competition is based out of Andhra. And the gentleman gives me an answer. I want to locate my unit in Goa. And we are like, right, young, na? We don't understand these things. Goa, sir? Then he asked this question, what is the cost driver? He says, Mr. Menon, what do you think is the major cost in ferroalloy? And if you looked at the numbers, the major cost is cost of power. Melting is involved. He said, very good. So you know power is a cost driver. Now I'll tell you why I'm going to Goa. Goa, those days, used to give a 50% power subsidy. So when his competitors were getting power those days at 2 rupees 40 paise, Karthik Alloys was getting it at 1 rupee 20 paise. I'm not finished. Second thing, why Goa is, look at the entrepreneur speaking, and he's not a finance MBA, but he understood cost drivers. You know what he said? The next thing, he said, all other regions in India is facing a power shortage. Goa is a power surplus region. And we were like, wow. He said, I'm not finished. I'll give you a third reason why I want to go to Goa. Goa those days is to be declared, as you very nicely analyzed it, as an industrially backward area. And if you are an industrially backward area, you get what is known as tax holiday. Please understand what is cost driver. If you are working in an industry, you want to cut cost, removing 10 people will be bullshit. You'll have to look at your cost driver. Are you talking about investment banking, from where I come? Removing 10 people can give you a lot of cost saving. Are you talking of IT? Labor is your cost driver. Are you talking about cement? Raw material cost is your cost driver. Are you talking about ferroalloys? Right? Please understand power. Are you talking about FMCG? Selling and distribution. Selling and distribution, FMCG. If you look at an industry, and you are all the industry experts, right? In fact, I listened to you about your industry. Each industry has got its cost driver. What strategic cost management only says is, look at the breakup, see where your major cost is, try and drive efficiencies in that cost. That entire thing is known as, thank you very much, thank you sir, is known as identifying and working on your major costs. A cost driver is nothing but a major cost. Having said this, why the breakup is because to identify cost. The second question that I want to ask was, right, okay, this is EBITDA. Earnings before interest, tax, depreciation, amortization. This is nothing but miscellaneous expense. This is industry specific expense. Please note one very important thing. Now, next question that you will ask me is, what after EBITDA? So before I take questions of what after EBITDA, I'll not rub this. I want to take questions. I'll put the format of profit and loss, finish it, then take your questions one by one. So EBITDA, I'll put it here. This is not jargon, but I'd like to just flip this out here and say EBITDA less, Anuji, D and A. Venkat sir, A stands for amortization. Depreciation, I'll explain. Depreciation and amortization, you will get EBIT earnings before interest and tax. Excuse me, many MNCs, and I have many colleagues here, call EBIT, right, Siddharth sir, as operating income. So I do not know, right, if some of your CFOs say operating income and you're wondering what he means, he is meaning EBIT, earnings before interest and tax. Reliance, they are very clear, they don't. But MNCs use this word, operating profit, operating income. This is nothing but EBIT less, I'll finish it, take it logically, less interest. Thank you. You will get earning before tax, less tax. You will get earnings after tax. Indian companies like Reliance, like Bombay Dyeing, Indian companies don't call it earnings, they call it PAT, profit after tax. In strategic, they don't call it PAT also, they just say net profit. Most consultants, and like Hema ma'am very nicely said, don't even say PAT, earnings, net profit, they only call it as bottom line. This is what Sudhir sir was saying. Gross profit and net profit analysis. Thank you. What is bottom line? Imagine this. I finished the statement. Now I'll explain this one by one. This is your one line. Thank you. This one line statement starting from income. Cut, 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 cut. It keeps coming down. It ends with net profit. So that's your top line. That's your bottom line. Please visualize this. I deliberately did not want to cramp it. Imagine this as a free-flowing statement starting from income, ending with net profit. What now you will ask, the questions that remain is, what is depreciation? Let me explain this. Now, let me explain this and then take questions from your end, which is a pleasure. Please keep the questions coming. What is depreciation? So, let me ask, Namita, what is the other colleague? Amalji, what is depreciation? Why? Why? Fantastic. Loss of value of asset. Why? Because of wear and tear. You want to provide for future replacement. Okay. Loss of value. Thank you. Loss of value. Depreciation is loss of value due to wear and tear, due to usage. Also, please note, depreciation is also loss of value due to passage of time. A very simple example I want to give. Right? And I want to give a very simple example. I buy a car, 10 lakhs. I drive from, let's assume I drive it from the showroom to my house and I park it. And daily I ensure that I keep it in working condition. I don't drive it. I ensure that I just put it on, ignition is on. And after 1 year, I try and sell this. And I go to dear Yashwant, who is a dear colleague, and say, Yashwantji, you buy it. I have got no use for the car. 10 lakh car, hardly driven 3 kilometers. Yashwantji is a dear colleague. It's a commercial transaction. He looks at me and says, okay, Mr. Menon, I'll pay you 8 lakhs. I say, 8 lakhs for this car? I have hardly driven it for 3 kilometers. It's a working condition. There's no wear and tear. He looks at me and says, it's because it is you that I'm saying, right, I'll give you 9 lakhs. If it's somebody else, I would have said 7.5 lakhs. What is depreciation? It's not only loss of value due to wear and tear, it's also loss of value due to passage of time, obsolescence factor. And what depreciation is, both simple as that. Life is very simple. What depreciation is for tangible assets. Amortization is, sir, I heard senior asking what is A. Amortization is for intangible assets. Right? The intangible asset is basically brands. Goodwill, license, patent. Rajiv ji comes from that industry. That's why he asked this question. So please note, tangible assets you can touch, feel, see. They depreciate. Same thing applies for intangible assets, except that don't use the word depreciate. The jargon there is amortize. For example, let's get this example. Hema ma'am, let's get this example. I have a license. The best example is Pfizer, Lipitor. I have a license which I have purchased. You know what this license gives me, Anuj ji, Pankaj ji? This license gives me the right to sell, let's say, a medicine for 5 years, and nobody else can sell. Right? But one sec. This license I have purchased, this license I have purchased for 10 million. So I have purchased a license. This license gives me the right to sell medicines. Nobody else can do it. Right? It's a patent. I'll only do it for 5 years and I purchase it for 10 million. One sec. After one year, you have total life of the patent is 5 years. After 1 year, now the remaining useful life of the patent is 4 years. Sorry, sir, that 10 million, your patent is now worth only 8 million. You would say in your profit and loss account, here, in your profit and loss account, you would say -2. Why -2? Because that patent has lost its value. Earlier it was worth 10 million because you had the right to sell it for 5 years. Now after 1 year, it is worth only 8 million. After 3 years, it's going to be worth 6. So again 1 -2 there. Another after 1 more year, right, 4. Till the last year, its value becomes 0. Again in this case, you would see that it is a case of loss of value due to, thank you, intangible assets. So if you are wondering what is amortization, it is nothing, sir. It's one of the simplest things. I want to simplify it. Please understand, intangible brands, patents, amortize, buildings, cars, plant and machinery, depreciate. And one very important thing on this depreciation and amortization, and very, very important thing, which I want you all to remember, depreciation and amortization, these are, and remember this please, these are non-cash expenses. These are non-cash expenses. Extremely important for you all to remember. These are non-cash expenses. What is a non-cash expense? A non-cash expense means that money is not going out. Excuse me, car value has dropped from 10 lakhs to 9 lakhs. Okay, it's a non-cash expense. No, I'm paying a salary of 1 lakh to sir. That's a cash expense. No, I'm paying an interest of 1 lakh to sir. That's a cash expense. I'm paying a rental of 1 lakh, cash expense. This depreciation and amortization is what is known as non-cash expense. That is why when we bankers, when we prepare it, and when you do it, ma'am, you should remember, Nitul sir, when you prepare what is known as, with your permission, when you prepare what is, I'll again flip this. I want to take questions, but I want to start one more concept here. When you prepare the cash flow statement, what is the cash available to you? The cash available to you will be PAT plus, thank you ma'am, plus you will add depreciation and why would you add it back? Because it is a non-cash expense, right? That money has not gone out. When will that money go out? When you start purchasing something new. अभी तो आपने purchase ही नहीं किया. You are only showing loss of value, and that is the reason where you would see that. Now I make a very, very important comment. I'll start my questions. I promise with you. It's a promise. Thank you for your patience. Please note capital-intensive companies. Companies which have got very huge asset blocks. Your ONGCs, your Reliances of the world, huge capital intensive. Please note, sir, their net profit may not be huge, Siddharth sir. Right? Thank you, ma'am. Very fast, ma'am. God bless. The net profit may not be huge, but their cash position will be huge. Why the cash position will be huge? Depreciation and amortization is going to be, especially depreciation is a huge amount. So if you look at these companies, you will clearly see that, right, these companies are going to be, though net profit is not very, very high, cash position will be very, very high. Why? Because you arrive at cash by adding non-cash expense. And what is that non-cash expense? It is depreciation and amortization. Before I take questions, 2 more headings. What is interest? Interest is nothing but financial expenses. And how much loans to take, we will discuss. But first, just understand what is interest. Interest is financial expenses. It is commissions, interest. These are financial expenses. So that is your interest. Remove that, you come to earnings before tax. Less tax. What is tax? Tax is nothing but corporate taxes. Remove that, you arrive at net profit. Start from income. Remove these expenses, arrive at EBITDA. From EBITDA, remove DNA, non-cash expense. I know I'm repeating, but one last time. Come to EBIT, earnings before interest and tax. Remove the interest. Come to earnings before tax. Pay your taxes. You get what is net profit. 3 rules. My final submission before I take questions. You are all here because you want rules to go back and apply. 3 rules that I want you all to remember. 3 rules that I want you all to remember always. First rule in business, be EBITDA, first minimum requirement, be EBITDA positive. First minimum requirement, be EBITDA positive. Minimum requirement. For example,